Now, a lot of people think that investing into the stock market is extremely hard. Well, in today's video, we are going to be talking about the only 4 ETFs you need to get a good jump start with your investments. So I hope you guys all enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe. If you guys are new to the channel, new to the team, we talk about everything money, stocks, money management, trading, investing. So subscribe, join the team. So let's jump into this. Now, before we talk about the best ETFs to invest in, first, we have to understand what is an ETF. Well, an ETF stands for an exchange-traded fund, and I know that sounds confusing, but guys, in simple terms, it's a way to invest into multiple different companies. It's a pool of different companies. So an ETF may have 500, 100 companies, and it's a great way to invest and get diversification because if you buy those companies individually, it would cost thousands of dollars. ETFs is a way to invest that makes it more affordable and still get great growth. Now that we understand what an ETF is, now let's talk about my top 4. Alright, so starting off with number 1, it's a GOAT. It's honestly one of the best investments that I would highly recommend. And even just this individual ETF, if you pick this one, you'll have a great advantage over other investors. And the reason why that is because hedge funds, these multi-millionaire traders and investors, they can't even beat this. So it's a great way to invest and get great growth, but still make it really simple. And it's ticker symbol VOO. This stands for the S&P 500 ETF. Now, what this is it's a way to invest into the top 500 companies in the United States. This is a stock market index, so a lot of people look at this to get a general gauge of where the stock market is. You may have heard sayings, the S&P 500 is up 1% or down 200 points. They're pretty much just talking about the top 500 companies. And like I said, the main reason I love this is it gets great growth. Over the past 90 years, through all the ups, through all the downs of the stock market, so the bull, the bear markets, this thing has had an average return rate per year at about 9.8%. So it's a great way to invest and not have to worry about it. And on top of that, you get some dividends. You get dividends, you get that passive income, that extra cash flow to compound on your account. And that's near and around 1.62%. So it's a great way to get great growth and to get some dividends to start paying that cash flow. Moving on to ETF number 2. Before we jump into that, hit that like button and subscribe. If you guys loved the first one, let's jump into the second. Alright, so the next one here is ticker symbol QQQ. Now the reason why I love this one here is this is a tech ETF. So they'll have companies that are heavily invested into technology, robotics, artificial intelligence. Guys, artificial intelligence is rated to grow at about 37% per year for the next 10 years. So this ETF is definitely going to play a huge factor on getting a lot of that growth because some of the holdings in here are going to be tech giants like Apple, like Microsoft, like Amazon. All of those companies are heavily invested into technology, robotics, artificial intelligence. And with that being said, the average return rate for this one here is near and around 9.3%. So it's still great growth and you get some dividends as well. But the main reason why I love this one is because over the past 5 years, it's historically outperformed the S&P 500. So it's gotten better than the S&P. So I'm super excited to see where this goes because I think we're only just getting started on technology. I think people each and every day get more dependent on technology. People can't leave their house without a phone. So, with that being said, technology is a huge factor in our day-to-day lives, and this ETF is definitely gonna help us all make some money. All right, moving on to ETF number 3. And this one here is heavily invested into dividends. So this one here is a great way to get some compounding interest, getting that cash flow, that passive income. And this one here is ticker symbol SCHD. This one seeks out high dividend paying companies. So instead of going out looking for the best dividend stocks and trying to buy them and pick and choose, this one here, you get great dividends. Like I mentioned, the S&P, the dividend yield was about 1.6. Guys, this one is over 3%, 3.54%. So you're going to be getting great dividends. And since this ETF was created, it's had an average return rate at 13%, outperforming the S&P 500 Dow Jones. So this is a great ETF that gets great growth and gets fantastic dividends. And the companies in here are going to be dividend powerhouses like Cisco, like Coca-Cola, Home Depot, Abgan, and a whole bunch of other dividend powerhouses. So moving on to the last and final ETF that you need in your portfolio now that we have tech, now that we have the top 500 companies, now that we have dividends, what are we missing? We're missing in real estate. Now, a lot of people think you need thousands or hundreds of thousands of dollars to invest in real estate. Well, that's not the case. This ETF is ticker symbol VNQ. Now, this one here, these companies in this ETF, the top one here is the Vanguard Real Estate Index. So pretty much just like investing into real estate, you'll get great growth. You'll get dividends as these tenants pay their lease, rent, mortgage. You guys get a little bit of that money in dividends because this one here has a higher dividend yield, almost at 4%, 3.98%. The only issue that this one seeks is per year on average, it's had a return at about 7%. So it's definitely the lowest, but what it makes up for is that high dividend yield coming in near and around 4%. The top holdings in here are gonna be it's the Vanguard Real Estate Index, and on top of that, it's a whole bunch of other REITs, which are real estate companies that go out and buy different real estate properties. And as the tenants pay their lease, mortgage, rent, whatever it is, you guys get a little bit of that money in dividends, and plus you get appreciation. So as the real estate value, becomes worth more money, you guys get a little bit of that appreciation as well. So it's a great way to invest into real estate, but for like a fraction of the cost, and it's an ETF that I would highly recommend. And now that we understand what the top 4 ETFs are, the best strategy that I would recommend for investing into ETFs is going to be dollar cost averaging. So investing consistently is a great way to get a good average price for your shares. And on top of that, we talked about dividends. Make sure you guys sign up with a broker that does offer DRIP, which is the dividend reinvesting. This is going to definitely compound your account. You guys can see the difference right here between reinvesting your dividends and not reinvesting your dividends. So reinvest those dividends and it'll make up for it in the long run. Guys, we'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and stay safe out there. Take care.